Alright, we go straight to trade management. Now that the fundamental development is over, okay, this is what we're looking at. Longer term, we expect a bounce. Of course, we're at this several times. We expect a bounce inside of that ending diagonal. At the most, it's going to come at 152, but probably above. And it should take us to 161 and 163. We're looking at this kind of momentum plot on the weekly time frame. Remember, there's possibility for increase in interest rates as of beginning of next year in sterling, and there's going to be a funding issue for equity markets. So we have this 4-hour chart here now. We've had it very thoroughly segregated. There is a correction, but it's not showing on the 4 hours. We're expecting a zero line bounce or a bounce towards the zero line still coming in. The momentum picture is very important here. This is a 4-hour chart. It's showing negativity on a bit negative, of course, on the 1-hour chart, our trading chart. So this 1-hour chart is actually showing an ABC formation. We know this is, of course, a level 3. There's now a head and shoulders. There has been a 4A, there has been a 4B. We're still in that 4C, right? We can bounce any minute, but that 4C already does a 1, 2, a 3, 4. We expect a bounce at 154.5, 154.35 is a neckline here, even a bit higher, and possibility at 153.5. These are the projections for wave C. Okay, so if you wanted to join the market today, you would want to sell below level 1. We're not labeling it, but there's a 1, 2, there's a 3, 4. You would want to sell exactly 156.68, 156.70. Stop is exactly 158. We're going for 154.50 or 154.60. We will not, of course, risk it to go all the way down to 153.50. At that point, 154.50 and 153.50, we long. Let's take a look now at the trade modules themselves. So this is what would happen on the 4-hour chart. We're selling these levels, 156.70, 156.50, all the way down to 4C here or 4C here. This would be a 3, this would be a 5. The segregation here shows there's a 1, 2, a 3, 4, and the 5 into 3, then maybe a correction, then another 5, maybe not. So again, targets are 154.5, 153.7. So today we would sell 156.5. This red arrow here is just below that. It's actually at 157, but you can't get below any entry except below level 1. So it's going to be 156.5. The stop is 158. If you're selling 1.5 minutes, it's $225 risk or 2.25%. We just take profit at 154.5. That level here at the green arrow equates to almost 1-to-1 risk reward, a bit more. It would equate to $300. If we're fortunate enough to see 153.5, it would be, of course, more, 1 to 2, but we don't expect to see 153.5 unless there is a fundamental driver. At these levels, we begin to compile a long at 154.5 and 153.7. We'll be averaging 153.65. We're buying 2.4 minutes. We have a stop at 151.9. 151.9 is right below level 1 here. You have a 1, 2, all of this is a 3. We're doing that 4 now, in which we're buying. So level 1 here is 151.9. Okay, and of course we're going to be targeting not only 159.85 or 160.8. We actually want to target 162 and 163. You have here 162 and maybe 163. You have here 163. Okay, so this is the principal trade to take, not even the short, but of course right now it is the short. The sentiment on the market is for that correction to continue down to 153.5. So the trade now is short, at least towards the moving average and a little lower. After that we reverse. It's gonna be, this is the primary trade and we would want to be in it. So maybe you could consider, after doing due diligence, to have entry longs, half size 154.5, half size 153.7. maybe only the 154.5 will fill, but it will be enough, and we take it to 163 with a stop at 151.9. You stop at that point is just 2.1% actually. Probably only expect half to fill, so for 2.4 minutes it's going to be 4% or 4.2%. Okay, for half of the size, of course, it's going to be half of the risk.